welcome back. We're here with Chase Edgelow, CEO of EverGen Infrastructure Corporation. If you weren't at Deal Night, he was the first presenter on stage. We're going to do this recap video here to bring you to the event if you didn't have a chance to go. So as a reminder for you guys, this is EverGen trading in Canada, EVGN. For our American friends, EVGIF. Chase, thanks so much for coming today.
Great. Thanks, Kevin. Thanks for having me.
So let's bring people up to speed in case they weren't at the event. So Chase, why don't you start it off? What exactly is EverGen? Give us a bit of a background on the company and yourself included.
Yeah, sure. So EverGen is a renewable natural gas infrastructure platform. We take in organic waste as our feedstock, and we own and operate infrastructure that takes in that organic waste, whether it's green bin, municipal, residential food waste, commercial food waste, or agricultural organics. We process those and we create really two products. One, renewable natural gas, which we sell to the utilities and into the gas pipeline network as green fuel, and agricultural fertilizer. So all of the waste from our facilities goes back into the agricultural community and gets used for future food production.
So just curious, for context, if this feedstock wasn't to go to you guys, where would it wind up otherwise?
So traditionally, this is a relatively new industry in Canada. Putting in infrastructure to deal with organic waste is new. We historically would have seen organics end up in landfill, and in landfill, as you can imagine, as waste gets buried deeper and deeper, and when it starts to decompose, what happens is it's devoid of oxygen. So picture waste in a giant pile with no oxygen. What you get is those organics turn into methane, and that methane is 30 times more harmful, give or take, lots of different estimates out there, but up to 30 times more harmful than CO2. And in terms of the greenhouse gas effects of those emissions. So for municipalities, what that means is these landfills often are some of the largest sources of their greenhouse gas emissions. And so being able to solve that issue by taking those organics, diverting them away from landfill, you're capturing the methane rather than releasing it to atmosphere. You're using that for fuel, and at the same time you're keeping all of those nutrients in the food cycle. You're not losing them into a landfill. They're getting segregated off, and then those nutrients can go back onto the farmers' fields after we're done separating them from the gas.
So Chase, for people that don't know you, you've got a really unique background that kind of positioned you perfectly to get to this point. So can you give the viewers a little bit of context as to where you came from and what your experience was before EverGen?
Great. Sure. So with EverGen, we put the company together in the middle of COVID. Myself, co-founder Misha, and our president, as well as our chairman, Ford Nicholson. And the three of us had all come from different backgrounds in the Canadian energy and resources space, and we'd seen projects developed, but nothing quite like renewable natural gas projects. And so what we wanted to do was bring that discipline and structure that we've seen in other large infrastructure projects to a space that is still in its infancy in Canada. And so my background, for those that may be aware of it, is I worked for 10 years at a firm, Macquarie, which is one of the world's larger infrastructure funds, an Australian version of Brookfield, essentially. And we looked at investing in, as well as advising clients on buying and selling energy infrastructure. So that was the decade before we started EverGen for me. And then prior to that, I spent time in the energy business putting in natural gas infrastructure in northeastern BC for Petro-Canada. So really, it's nice to come full circle into putting in infrastructure that we know is going to be around for the long term, and provide that sustainable edge to our existing pipeline network in Canada.
Mm-hmm. So let's talk about the assets that you own today. If we're looking at, let's just say, your next year of operations, can you walk us through some simple financial projections based on the facilities you currently have right now? What would that look like?
Sure. So we've got a core portfolio of 4 projects in Western Canada that are all operational today. Fraser Valley Biogas, GrowTech, Net Zero Waste Abbotsford, and Sea to Sky Soils. And we're currently under construction on 2 of these projects. So we broke ground in late September on Fraser Valley Biogas, which is a facility located in Abbotsford. It's been producing renewable natural gas for over a decade, and our expansion there will double the size of the facility. What's also happened in the last 10 years is the market for renewable natural gas, for that green gas, has come up significantly. So we're looking to bring that facility into the 2020s with a new contract and with a new look and increased capacity. And then GrowTech is an operating biogas to power project in southern Alberta near Lethbridge. It's also been producing for a number of years, but what they've been doing is they've been taking organic waste from the surrounding farm. We're partnered here with a large potato farm who built the facility 8 years ago. We've come in, we've acquired 67% of that facility, and we're installing gas upgrading equipment. So rather than using the biogas from the organic waste and making power, we're going to take that gas, upgrade it, and put it into the pipeline. By the end of the year, we'll be selling gas also into Fortis's network through the Alberta grid, and that's a 20-year offtake agreement there that underpins that project. So with both of those projects online, we're 2/3 of the way to our growth target, which is $13 million of EBITDA from our existing core portfolio. What gets us the final step of the way is our Net Zero Waste Abbotsford project, where we've got another offtake agreement with Fortis BC that we executed last year, and we'll be bringing that project on and converting it from a existing compost facility to a facility that takes in organic waste on the front end, still composts a portion of the waste, and the rest of it will go into 2 new digesters, and we'll produce gas into Fortis's network from those 3 facilities, as well as our facility at Sea to Sky Soils will be producing close to 500,000 gigajoules of gas annually.
You mentioned $13 million of EBITDA. So if we're to take that and compare it to some of your industry peers, I know there's some recent big news that I'm sure you want to talk about, that acquisition, but if we were to compare you to your peers, looking at valuations and comparisons, can you kind of walk us through, for one, who are your peers, and 2, how does EverGen compare?
Yeah, so I think what's really interesting in the renewable natural gas space is that it is truly one of the only transition fuels that is here and now, where you're not waiting on technology advancements. So there has been a bit of a rush to get into the space by a number of different parties. We saw BlackRock make an acquisition, Vanguard Renewables earlier this summer. Archaea recently announced they had a bid from BP, and they're kind of the largest peer in the space. So they are approximately a $3 billion enterprise value company that's generating about $80 million of EBITDA. And so it is still a really early space. There's about 7 peers. Those that are producing over $30 million of EBITDA all have enterprise values or market caps north of $1 billion. And then there's about 3 or 4 peers that are in and around where we are in terms of current cash flow, and those companies are valued anywhere from where we're valued all the way up to $1 billion on the strength of the future projects. And that's what's really exciting right now, is there's a lot of optimism in the space. I think certainly U.S. listed companies trade at a premium. There's a lot bigger investor market, but I think as we get the word out there on the type of projects that we're doing in Canada and the contracted cash flow that we have, that's where there's a chance for a real significant re-rate.
Yeah. And so you were saying, and I'm just opening up my stock app here, the market fluctuates, of course, but you're in the ballpark of a 30 million market cap. So we're talking about companies with revenue that's not that much larger than yours, trading at, you said, $1 billion plus. So interesting disparity there. So that's just why I wanted to point that out to anyone watching.
Yeah, we've got a plan to get to $30 million of EBITDA with our existing portfolio, and we're fully funded to get there. So that's, for us, that is really what's exciting, is closing that gap and the valuation uplift that's going to come with that as we progress. And right now we've got 2 projects where we've got construction underway, so we've got near-term milestones and catalysts that we think will prove to the market that we're executing, and that's the opportunity for investors today.
And so we've gone over your existing facilities and the platform that you have right now and where that can take you. Perhaps maybe at a high level, let's talk a bit about your growth plan for the future. What does that look like?
Yeah, so our growth plan is really premised on using our strengths to our advantage. So where we've been successful is coming in and partnering with existing owners of infrastructure that maybe don't have the same operational expertise, or they own a single facility and it's adjacent to their farm, and bringing in a collection of facilities and a team that we're really proud of here at EverGen that can come in and problem solve and take those facilities to the next level. So I think that's, we've been doing that historically. We're looking to do more of that across Canada, in Alberta, Ontario, Quebec, and other projects in BC. The other way that we get there is through greenfield projects, where we get involved early with either projects that others have started to develop and we're coming in and we're bringing capital and expertise to the table, or projects that we've developed ourselves from scratch. I think a real open slate of opportunities, and we see that that path to continued growth being funded in a number of different ways, whether it's using our free cash flow, using our existing balance sheet, or bringing in a strategic partner at the project level. There's a ton of interest from private capital to invest or co-invest in projects.
So how I'd like to kind of conclude all of these interviews is with a pitch. So imagine you and I are stuck in an elevator, and I want the pitch, and somebody's opening up their app. They're seeing share prices about $2, market cap's about $30 million. Given everything, why don't you give us the elevator pitch summary? Why should somebody watching this buy your stock right now?
Great. So EverGen is in a space where there is unlimited buyers for the product that we make. So what you're looking at is a transition of the entire pipeline network across North America to more and more renewable fuels. So the product that we're making is in high demand. We're taking measured risk. We're building facilities that are contracted for, in many cases, 20 years in terms of having annual reoccurring revenue that we can bank on, that we can count on. And once we're complete construction of what's in our portfolio today and what we're funded to do in terms of our first 3 projects, we're producing north of $13 million EBITDA in a space where we've seen private assets transact at north of 12 times. So from our perspective, there's a clear valuation gap, an opportunity for investors to take advantage of the depressed market pricing for small cap stocks. And ultimately, we're a platform that is going to continue to have value regardless of where the public markets are at.
Well, fantastic. So guys, this is Chase Edgelow, CEO, EverGen Infrastructure Corp. Canadians, you can trade the stock EVGN. If you're American, EVGIF. Would love to have you back. Do this again. Chase, thanks so much, man, for coming in. I always enjoy talking to you.
Yeah, likewise. Thanks, Kevin. Appreciate all the great questions. Take care.